While the rest of us were stuck in 2008 trying to survive layoffs and eating Happy Meals when they were actually value meals, someone out there was secretly inventing digital cash that didn't need banks or your boss. Satoshi Nakamoto, whose identity remains anonymous, dropped a 9-page PDF called Bitcoin, a peer-to-peer electronic cash system. It wasn't a novel or a finance textbook, just a quick read you could finish while you're taking your 30-minute bathroom break at work, stinky. But the idea of Bitcoin was digital cash with no bank interference. It's basically money that moves as fast as an email without some middleman taking a cut, freezing your account, or asking for 10 forms of ID. Now fast forward 2 years. In 2010, a programmer made history by spending 10,000 Bitcoin, which was about $41 at the time, on 2 pizzas, beloved. I would have felt like a fucking clown. Because in 2025, with Bitcoin over 100K, that same order is worth over $1 billion. Congratulations. Now here's where people really lose their minds. On one side, you've got the Bitcoin believers. Michael Saylor calls it digital gold and the best way to protect money from inflation. Starting in 2020, his company, Strategy, which you might remember as Michael's Strategy, went all in. First they used their cash reserves, then they borrowed money, then they even sold more shares, all just to buy more Bitcoin. Fast forward to today, they hold over 600,000 coins, worth tens of billions. For Saylor, Bitcoin isn't just the future of money, it's the rocket fuel for the next financial revolution. And then on the other side, you've got Warren Buffett, the investing legend worth over $100 billion, who's built his empire buying businesses that actually produce cash flow. When it comes to Bitcoin, he's called it rat poison squared. He argues it produces nothing, pays no dividends, and has no intrinsic value. The only thing propping it up is the hope someone else pays more for it later. Basically, it's either digital gold that saves civilization or just expensive monopoly money. Bitcoin is often called digital gold because it's scarce. And that's not just marketing hype. The code itself limits supply to 21 million coins ever. As of now, about 19.7 million are already mined, which means there's less than 1.3 million left to ever enter circulation. Now, some critics may say, yeah, but digital assets aren't real. Which is funny because the same critics happily wire millions for JPGs of bored apes. So let's be real. Bitcoin has value because enough people agree it does. Just like Pokemon cards, just like sneakers, or your favorite Starbucks pumpkin spice latte. Crypto is still the financial Wild West. Except instead of cowboys, you've got 19-year-old YNs in hoodies promising 1,000% returns. Personally, I'm a wheel to the other side of the street when I come across those guys. Now take FTX. Was a $32 billion empire one day, bankrupt the next. Turns out they were funneling customer deposits into risky bets at their sister firm. When the truth came out, billions vanished overnight. And now their founders doing 25 years for fraud. That's like trusting your landlord with your security deposit, then being shocked when he spends it on bottle service in Miami. Crypto also lets you do leverage trading. Basically financial Red Bull. You can 75x your position in seconds and lose it all even faster. Here's the fun part. Mining Bitcoin eats electricity like your fat ass eating office donuts. In 2025, Bitcoin mining burns around 105 terawatt hours a year. That's basically a small country's worth of energy. And the good news, about 60% now comes from renewables. The bad news, try to explain it to your boss while your laptop froze. Sorry, Karen. Texas is too busy solving math puzzles for fake internet money. Now, Bitcoin price predictions are everywhere. Some sound scientific, others sound like fortune cookies. Now take the gold theory. Logic goes, if Bitcoin takes even half of gold's market, that puts it at around 400,000 per coin. Wild, but not impossible if enough people start treating Bitcoin like digital gold. Then there's stock to flow, the prediction tool that's half science, half cult following. It claims Bitcoin could skyrocket to 4 million by 2030. Sounds impressive until you realize it also missed a few major crashes. It sounds smart until you remember the market does whatever it wants. For most of us, these aren't investment strategies, they're scratch-off lottery fantasies. Now let's talk about your paycheck. In 2025, the Department of Labor actually rolled back its old warning that basically said, don't you dare put crypto in your 401k. Then, on August 7th, President Trump signed an executive order telling regulators to open the door for alternative assets and retirement accounts. And yes, that includes your crypto. In the future, when you're picking investments for your 401k, you might see a Bitcoin fund sitting right next to your safe, boring S&P 500 index fund. Your retirement savings could skyrocket or get wrecked at 2 a.m. because Elon Musk decided to post a Dogecoin meme. Yes, crypto creates new gigs, developers, compliance, and security, but regulations are tightening. Entire job categories can disappear faster than that girl you've been texting for months, but disappear when you finally ask her to grab dinner. So maybe don't quit your job to become a full-time NFT consultant. Bitcoin is still a roller coaster. When stocks drop 5%, Bitcoin might drop 20%. And that volatility bleeds into housing, investments, and your chance of retiring before your spine gives out, Miss Johnson. Now, rule of thumb. If it feels like Vegas money, treat it like Vegas money. Don't put your rent, your car payment, or your kids' tuition in Bitcoin unless, of course, your spouse loves the idea of eating ramen 5 nights a week. And there's HODL, the typo that became gospel. Back in 2013, during the nasty Bitcoin crash, a drunk guy on a forum meant to type, "I'm holding," but instead smashed out, "I'm hodling." Instead of correcting him, the crypto crowd turned it into a battle cry. HODL became the ultimate excuse to never sell, no matter how red your portfolio gets. Today, millions call themselves hodlers, which is really just a financial version of saying, if I sit here long enough, maybe my problems will magically fix themselves. So is Bitcoin the future of money, or just the world's most expensive lottery ticket? The answer? Nobody knows. But here's what we do know. Rent is due Friday, groceries aren't getting cheaper, and your boss still won't approve that vacation request. For the 9-to-5 worker, the smartest move isn't betting your whole paycheck on Bitcoin, it's staying financially stable, saving and investing where you can, and not falling for hype. Because at the end of the day, Bitcoin might go to 4 million, or it might just go back down to $4. But you still gotta show up Monday morning.